Africa is home to vast business opportunities, but to unlock that potential, we're going to need investment. Well, the rankings are officially out, and we've got details on where you should invest in Africa. Plus, why are Africans opting for education abroad, and how a virtual doctor is revolutionizing healthcare in Rwanda. We've got all these details, plus other news and views from across the continent, coming up over the next half hour. So, Jumbo, Sawubona, and welcome. I am Tumelo Mototwane, and this is #Africa. Here on #Africa, I often say that Africa is open for business, but if you're an investor looking at the continent, it's good to know where and what to invest in. Now, every year RMB publishes their Where to Invest in Africa report, and this year's report has shown a bit of a shuffle in the rankings. It seems North Africa remains dominant, while Southern Africa has taken a bit of a tumble. Neville Mandamika is a Sub-Saharan Africa economist at RMB and one of the co-authors of the report, and he's got all those details. Neville, thank you for your time and welcome.
Thank you for having me.
Let's talk about some of the top 10 African, countries to invest in. Just take me through some of, that we have in the top 10.
So we've got Egypt maintaining that #1 spot. I think post the Arab Spring Revolution that we saw a couple of years ago, Egypt has really come a long way in terms of attracting foreign direct investment. Its capital markets are strong, and we've really seen that energy going into North Africa. And we've seen Morocco moving up to that second position where South Africa held last year. So we've been sort of knocked one back down, but I'm sure it's no surprise living here. And again, it's the same theme around political stability, foreign direct investment, and economic growth. I mean, those countries are growing at north of 4% compared to here, where we're sort of teetering around the sub 1% mark.
Yeah, but we're also seeing in Tanzania, kind of being knocked out and falling out of the top 10. What's behind that?
Well, it's the ease of doing business. So if you look at our methodology, it's all to do with macroeconomic environment and how easy it is for businesses to actually transact. And that's where Tanzania is falling short, because if you look at it from a growth perspective, I mean, this is an economy that's growing at north of 5.5%. So they're doing quite all right on that front. But the administration, from a political perspective, and some of the regulatory changes that we've seen, particularly in the mining space, have made it really difficult for firms to actually push through that FDI to sustain that level of economic growth.
All right, so Neville, outside of the top 10, then, which countries have shown, big improvements and even quite surprised you?
Well, what has really surprised me, to some extent, has been Ethiopia. I mean, we've talked about, this whole euphoria around Ethiopia opening up and, open for business. I think that's a line that you mentioned. And nothing encapsulates that more than Ethiopia. But unfortunately, it's still quite a closed economy. It's not that easy to actually move your money in and out of the economy. So from that perspective, while investors, particularly from South Africa, are looking at it with a very close interest, it's still very difficult to actually do business there. So that's one that is really surprised me. South Africa has saddened me more than it has surprised me, in the sense that with all the issues that we're seeing, I mean, I won't even talk about all of those issues, but just the constraining economic environment has made it really difficult for SA to maintain its coveted second position. And not too long ago, it was sitting at #1. So we've come quite a long way over the last couple of years.
Yeah, and obviously that goes against the president's drive for economic investment into South Africa. But let's talk about those countries then at the bottom. Which are those countries and where are they failing, or where are some areas of improvement?
Well, if we look at some of the resource-based economies, right, so your Zambias, your Nigerias, for example, those are struggling a bit. I think after we saw the commodity price drop back in 2016, we haven't seen that V-shaped recovery that we all would have wanted to. I mean, oil is only sitting at around about $65, $67 a barrel, whereas not too long ago we were sitting at 130. So we've come quite a long way, and some of those economies are struggling. Economic growth within Nigeria, we're sitting at 2%. There's an economy that used to grow at 7%. So we're sort of, coming a long way down in terms of some of those resource-based economies. Zambia going through some of its own issues, but again, it's still resource-based in the sense of copper. So, some of those economies are struggling. But I think it's important to note that within the global economy, it is ultimately slowing down. So a lot of export-led economies, which are a lot of African countries, will struggle in such an environment.
Let's talk about then what I found particularly interesting in the report, which were the 6 key sectors. What are those?
So the mining sector or resources continue still to be the mainstay. The largest export earner for for a lot of economies. Agriculture is poised to do relatively well, unless if you're in Namibia, of course, where it's suffering drought issues, etc. But again, East African economies from an agriculture perspective will do relatively well. ICT, the fourth industrial revolution, I mean, that's a buzzword that has been really talked about within the context of Africa. And some economies are doing relatively well. Your Moroccos, your Kenyas are doing particularly well in terms of actually harnessing that energy, that fourth industrial revolution. Yeah. And of course, retail. I mean, there are stories of South African corporates venturing into the rest of the continent from a retail perspective. Some of them have been burnt, some of them have made a success out of it, but I think it still remains a critical sector in terms of driving economic growth because of that talked about demographic dividend, where Africa is set to benefit given its bulging youth population and all of that. So that's quite an interesting sector. And then of course finance, we can't ignore that in terms of some of the dynamics that are happening, particularly within your East African region and also Southern Africa from a mobile money transfer, internet penetration, mobile money usage. I think that's going to be a real driver for economic growth.
So I have to put you on the spot there, Neville. Where would you invest?
My personal money?
Yeah.
Well, I would like to say South Africa simply because we live here, but I think unfortunately we are all competing for the same dollar. I do concur with our own view that Egypt is the place to be, and we're seeing a lot of not only corporates but institutional money managers, etc. Looking at Egypt as well, because everything seems to be coming right at a time where a lot of economies are scoring their own goals. So I'll be inclined to say Egypt, of course, after South Africa.
All right then. Well, Neville Mandamika, thank you so much for your time.
Thank you.
All right then. That was the Sub-Saharan Africa economist at RMB, Neville Mandamika, joining us. But now Nigeria's diesel-dependent economy is bracing for clean fuel rules. Diesel prices are expected to surge as United Nations rules aimed at cleaning up international shipping come into effect next year. And that has generated dependent businesses in Nigeria worried.
It may be one of the world's largest economies, but it's not easy to run a business in Nigeria. Some 70% of the country's companies rely on generators, according to the World Bank. And for businesses like this bakery, it may soon become harder. Diesel prices globally are expected to surge, some estimates say by as much as 20%, when new rules enforced by the United Nations come into effect at the start of January 2020. They're aimed at cleaning up international shipping and getting vessels to consume less diesel.
If the price of diesel goes up, it becomes more difficult for us to operate because consumers, considering the characteristic of the market in which we operate, are not ready to bear the price. And so it becomes more difficult, for us to think about expansion. First is survival, so we will survive the situation if the price of diesel goes up. This is a question I cannot really answer.
Analysts are not too optimistic either.
Many businesses may go under, businesses may struggle to survive, or in the best case scenario would at least downsize and shut down some production capacity. Because if you can't pay for the diesel for production, you can't pass the pricing for increased costs in diesel. The next logical thing to do is to shut down some of that production capacity and produce at the quantity that the demand can carry the price you are willing to sell at.
While many Nigerian households and small business generators are powered by price-capped gasoline, larger firms, apartment complexes and bigger houses can only run on diesel. Government data shows generators provide at least 14 gigawatts of power annually, compared to the 4 gigawatts supplied by the country's electricity grid. Still, although reliable, the machines guzzle cash and spew pollution. In a country where some 40% of the population has no access to grid power, most businesses say they have no alternative. The cost, however, is likely to be high. And the spike could also hit GDP growth, currently limping along at 1.92%, with inflation at 11%.
After the break, we've got details on a potential education crisis in Cameroon and why Africa's wealthy are opting for education abroad. Do stay with us.